Good morning, folks, and welcome to Swing Trading Today. This is Bob Desmond, and let's talk about, first, the pre-market activity in the market. Second, members, we're going to segue into a review of our positions. And lastly, if you watch us on YouTube, click that subscribe button if you would. If you're watching us on any other social media platform, follow me there. If you watch us on the website, enter your email address. We hate spam too. So let's begin with the NASDAQ E-minis. We're down this morning, down about 8 3/4 points. So a bit of weakness, but no shock, right? We saw Netflix announce after hours yesterday subscriber growth that was lackluster by a mile. Also, Amazon, this may not be a long-term issue, meaning it may not last through the entire trading day, but they had major problems. I was on their website at the beginning of Prime Day, and the site kept crashing. This is Amazon. So both of them took it on the chin after hours. So why is this important to the major averages? It's because the FANG names have led the charge here for the large caps. And absent their participation, this market's going to have a lot of problems moving higher. So we have a bit on a 4-hour chart. These are all 4-hour charts. A bit of a lower high here. We did break down to new lower lows. Now what we're looking for here is to see whether or not this lower band of support will hold, and will we rebound? And that's at the 7,300 level. And we continue to weaken as I speak. The S&P 500, not as bad of a chart. It looks as though we have a pullback. We are trading below the 20-period moving average, which is not necessarily what you want to see. But I'm willing to say, you know what? This is a continuation breakout pattern. We do not have a lower high. Therefore, the probability of a breakout is still pretty good here on the S&P 500. What I will caution is that when you take a look at RSI right down here, we are seeing a bit of a divergence, meaning as the S&P 500 has made higher highs, RSI has not been confirming. It has been breaking down. So a bit of a concern here, and in fact, we are making lower lows as well now on RSI. And there you have it. There's your breakdown. So do you go shorting on this? No. It's just a bit of data to keep at the back of your mind. As it stands right now, the path of least resistance remains higher for the S&P. Let's take a look at the dollar. The dollar had a weak overnight session. It had a head and shoulders setup, left shoulder, head, right shoulder. Here's the neckline, and we broke that neckline. So when I see a weak dollar, my expectation is for there to be some strength in the metals market, and we're seeing gold a bit higher this morning. It's attempting to recapture prior support. Remember, this was a tight trading range for several days, and I warned here last week that we may have a head and shoulders setup. Left shoulder, head, right shoulder. Here's the neckline, and it broke. Let's leave off here with the Russell 2000. The Russell has acted as a leadership group. These are the small caps, and they are showing a bit of weakness here. I think it's the pause that refreshes. And here's a bull flag formation. We built a cup. Now we have a handle. Here's our pivot point up here at 1708.56. Watch for a rally up and through it. We do have some serious resistance up there. Now, if we break down below this support level here, at let's call it 1626, the Russell 2000 has a lot of problems. But as it stands right now, the path of least resistance favors bulls, and the probability of a continuation move higher is still very good. Members, let's segue into a review of our current positions. and a strategy session. If you're not currently a member, sign up for the 14-day free trial offer. And everybody have a very profitable trading day. Members, let's get to it. Okay, folks, let's begin the conversation off with